But let's shift focus to another company then. Godrej Consumer reported numbers yesterday. It was a slight miss on revenues led by the international business. Priya Seth caught up with Vivek Gambhir, who is the MD and CEO of the company, started by asking him the cause of the slowdown seen in the company's growth.
In India, we delivered a 5% volume growth on a high base of 14% growth, and versus Q1, where our growth was 1%, so a sequential improvement versus Q1. And if I look at even performance in April, May and June was definitely much stronger than April and May. So definitely I feel like things have bottomed down, and going forward, given our actions that we are planning along with our new innovations focus, things should definitely be much better in the quarters ahead as far as India is concerned. Internationally, we delivered a constant currency growth of 9%, where I think Indonesia has been steady, though slightly below expectations. Africa had some challenges, but the team is taking lots of corrective actions to get growth back into double digits.
You said volumes have grown 5%. Do you think that the worst is over as far as the industry is concerned? Do you think that volumes will pick up starting the second half of FY20?
The consumption slowdown has been persisting over the last 6 to 9 months. But hopefully with the kind of pickup that we've seen in the monsoon over the last couple of weeks, that really should alleviate some of the rural stress, which was one of the biggest factors as far as the slowdown was concerned. At the same time, the government's taking lots of actions to be able to get rural growth back on track. The third, I think, factor which makes us feel optimistic is again a lot of efforts to improve liquidity in the market, and with hopefully further reduction in RBI rates, I think liquidity should improve in the market. All of these factors make us believe that the volume growth should be much better for the industry going forward, and we are accordingly making some very aggressive plans for new launches, taking some actions to deliver much better volume growth going forward.
During the quarter, GCPL took some cuts in terms of prices for soaps as a category. Do you think that helped push up volume significantly for the category? Where do you see really the pressure points panning out?
Generally, these pricing strategies are based again on competitive actions and what the overall demand environment looks like. At this stage, our focus is on driving volume growth, and volume growth will come through a function of new product launches, above the line marketing investment and consumer offers. So we will deploy the entire marketing mix and our innovations to keep on driving volume growth.
Do you think that there is scope for further price cuts in your portfolio?
We will evaluate it. Certainly, I think it's a mix between trying to drive top line growth as well as volume growth. Right now, our focus is on volume growth. If necessary, we are willing to take further pricing actions to drive volume growth.
And specific to categories, because soaps has already been taken, what about hair colors? Insecticides has underperformed during the sector. Do you think that there is scope to take price cuts there?
For insecticides, we've already taken some price cuts in certain parts of India. We will keep on evaluating it. On the soap segment, I think as you mentioned, we've already taken enough pricing cuts. Let's see how the demand environment pans out. On the hair color side, I don't expect many pricing actions, but in insecticides certainly we'll evaluate and see how the demand environment pans out. With the monsoons picking up, that should hopefully be quite positive for the insecticide sector.
Talk to us about the kind of growth in the international business. We've seen business in Indonesia being a bit subdued. We've seen pressure in Latin America as well as Africa. When do you think the tide will turn as far as international markets are concerned?
As far as Indonesia is concerned, the business has delivered very strong profitable growth over multiple quarters now. This last quarter, the performance was slightly below expectations. It's a temporary phasing issue, but the team is very confident to deliver a strong profitable growth for the remainder of this year. In Latin America, Argentina has been delivering very well for us, so we have seen the worst behind us. Within Africa, South Africa has again recovered quite nicely. West Africa has been steady. The challenge in Africa has been some of our smaller export markets, but corrective actions are being taken. So I do expect Indonesia to return back to strong growth, Latin America to again come back to strong growth. In Africa, we are in investment mode right now. top line growth might take some time to deliver. The focus in the near term will be on driving strong profit growth. So expect strong profit growth from Africa. The top line growth might take some more time.
And in Indonesia, do you think by the next quarter things should be a little bit better than what they are now?
Absolutely. I think in Indonesia the team is very confident of returning back to the historic growths that we've seen in that business.
A quick question on margins. Can you break up the margin growth expansion this time around?
Generally, we saw a very strong margin expansion, I think, across both India and Indonesia. In spite of high margins, we've seen expansion in both growth margins and at an overall level expansion in EBITDA margin. In Latin America also we've seen improvement in margins. In Africa we saw an erosion in margin. This has largely been driven by investments we are making in marketing. We've relaunched the Darling brand in South Africa, in Nigeria and Ghana. That's taking some investment. We're scaling up the wet hair portfolio. So the bulk of the margin erosion that we saw in Africa was driven by upfront marketing investment. As those brands scale up, I'm very confident that you will see improvement in Africa margins as well.
Give us an outlook on input costs and how you expect raw material prices to move going forward.
So far, input costs are more largely of the same. It's been fairly benign. So we are not seeing any significant upward movement in input prices over the next few quarters.
All right, and one last question as far as FY20 is concerned. Do you expect FY20, the second half, to be better than the first half of the year?
We are definitely planning for that, and we are quite optimistic. We are optimistic that as a whole, this year will be better than last year as far as volume growth is concerned, and we are certainly quite optimistic that the second half will be better than the first half.
Okay, optimistic from Godrej Consumer. Expect second half to be better than the first half, and they expect volume growth to pick up. Remember, volume growth was around 5% for the quarter gone by in India. This was also on account of a high base. We'll take a break now. But